Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed by our guest. But before we kickstart the show, let's see what the global handover looks like. A mixed session on Wall Street sees the Nasdaq and S&P 500 close lower for the third straight day. Investors now look for cues on the Fed's rate hike trajectory from Fed Chairman Jerome Powell's speech later today. Stocks in Asia Pacific open mixed while the SGX Nifty signals a flattish start for the Indian market. European markets settle marginally lower as traders monitor China's COVID policy. Stock 600 gave up early gains to settle flat with a negative bias. FTSE outperformed, ending 0.5% higher. Natural rubber prices skid to two-year lows. Good times ahead for tyre companies. Stocks in the spotlight today are Zomato, Gland Pharma and Bharat Bijli. Okay, let's get going and talk about tyre stocks. First up on the show, Nitin Agarwal from MC Pro joins us now. Morning, Nitin, and thanks for joining in. We know for a fact that natural rubber prices have cooled off quite a bit, trading close to two-year lows. What are the other triggers in place as well that are propelling these tyre stocks of late?
Thanks, Karunya. Two main reasons that were plaguing the tire industries were the increase in the raw material prices and the severe shortage of semiconductor chip that led to the OEMs to cut their production. First, talking about the raw material prices, there are two main components of the raw material basket for tire manufacturers. One is the natural rubber prices, second is the crude oil prices. As you correctly mentioned that the natural rubber prices are currently trading at around 2 years low, which is a big benefit for the tire companies. Secondly, if you look at the crude oil prices, they have also peaked in March 2022 and have corrected quite significantly from there on. And hence, the entire raw material basket is expected to help the companies post a significant expansion in the operating margin. Now, coming to the severe shortage of semiconductor chips, now as we have, as the OEMs have indicated that the chip shortage is currently waning and the impact is reducing, and hence they have increased their production, and that is leading to the increase in demand for the tire manufacturers. If we look at their quarterly numbers, all the Apollo tires, CEAT and MRF have registered around high teen numbers in their top line on a YOY basis. This indicates the production has definitely increased. So yeah, these two concerns have which were plaguing the industries are out of the way, and we can witness a significant up move in their top line as well as in their operating margin. Yeah.
Well, that's good to know, but what about valuations? Should we as investors and retail investors specifically look at buying at current levels? Will this upward trajectory continue in the next, say, a couple of quarters? Do you expect that?
Well, what we believe that the stock prices had corrected significantly, though in the last 1 or 2 months they have seen a significant spike in their stock prices. But given the current demand outlook scenario and the softening in the raw material prices, we expect significant improvement in their financial performance. If we talk about valuation specifically, as per our analysis, the CEAT is currently trading at around 16.4 times FY24 projected earnings. Apollo Tire is trading at around 13.4 times. MRF is definitely trades at premium valuation, and hence its valuation is around 26.7 times. If you look at the long-term average, the valuation currently seem to be at their discount to the long-term average, and hence we advise investors to accumulate these stocks in a staggered manner. If there is any softening on the back of the global volatility in the global stock market, then we can definitely have a good price point to pick these stocks.
Okay. Any particular favorites you have from the ones you mentioned at MC Pro? Which sort of tire sector company or player has the most potential from here on?
Well, what we prefer is definitely all three companies are good, but the alpha that we can expect from a company like CEAT and Apollo Tires, because there is a strong room for the growth. For example, Apollo Tyres international business is picking up quite significantly. Their Europe business is ramping up, and hence the impact of operating leverage should be visible in next 1 quarter or 2 quarter. And Fiat Tires is definitely primarily on the back of their focus on the PV and two-wheeler segment, where they can generate higher margin as compared to commercial vehicle segment. And hence, we prefer these two stocks from the tire space.
Okay, and Nitin, since I have you here, it's the end of November. How are auto sales looking for the month gone by? What's the trend? Because we did see, the festive season and the wedding season also significantly play out in October and trickle into November as well. So, what are the likelihood of OEMs doing well this time around for volumes, wholesale volumes?
What we believe that this month could be a flattish month on a month basis for OEM, primarily on the back because of the channel inventory correction. What OEMs generally do is they generally stuff their inventory ahead of festive season or any other big season. And now on the next month and the next 2 months, we see significant correction in the inventory, and the wholesale volume generally doesn't pick up. So we see a muted month for OEMs. The next month could be a strong month for the companies, primarily on the back of the year-end discount that they generally offer.
Okay, great, Nitin. Lovely chatting with you. Thank you for joining us and talking to us in detail about tire stocks and, of course, the way forward for auto sales as well this month and for the next couple of months as well. Okay, back to talking technicals. Then we have Kunal Shah joining us from LKP Securities. Morning, Kunal. What is the trade setup telling you? What kind of a trading day should we prepare ourselves for?
Good morning, Karunya. Firstly, talking on the index perspective, we have seen a stellar run-up in the Nifty index and in the Bank Nifty index in the last 1 month. Now, what the market is trying to tell us from the current level is that it has been prepared for a pre-budget rally. So we have a budget in February, and the markets are already pricing in on the sectors and the stock rotation, which is currently happening in the overall market front. Now, if I talk about Nifty specifically, we are seeing some hurdles around the level of 18,700, 18,800 on the upside, where even we are not able to close above that level on a closing basis. On the lower end, the bulls are trying to defend the 18,500, 550 zone on the downside. So I can say it's a range-bound market currently, but overall the structure.
Okay, I think we've lost Kunal's audio again. Okay, while we try to connect back with him, let me just flag off the big stocks in the spotlight today, the stocks that are likely to be in news and could also react to that news flow. The first name I want to flag off is Zomato. Well, what we're picking up from reports from our very own network entity is that Alibaba is likely to sell $200 million worth of shares in Zomato. Now, remember that Alibaba already, or rather currently, holds about 13% stake in the company, and what is likely to have been sold or likely to be sold is about 3% stake in the company. Block deal is set to happen at a 5 to 6% discount to the trading price of Zomato, last trading price. Okay, I think Kunal is back with us. Kunal, you were sharing your view on the index.
Yeah, so currently, as I was talking about the Nifty index, I think the view still remains bullish. 18,500, 550 will act as a cushion for the bulls on the downside. Upside, I'm expecting index to go towards the levels of 18,750 to 18,800 on the upside. Overall, if I talk about a long-term perspective, I'm expecting the index to cross the levels of 19,000 by December end as well. So the view structurally remains bullish, and we can see the momentum going on the upside in the coming days as well. Specifically talking on the Bank Nifty index, it has been a stellar outperformance by the banking stocks as well, whether it's been PSUs or whether it has been the private banking space. Now, for the Bank Nifty, since we have seen a very sharp rally, it might continue to consolidate in a broad range here. On the lower end, 42,800 remains as my immediate support, which should act as a stop loss for the bulls. And on the higher end, 43,500 is acting as a resistance. Once we cross that level of 43,500, where the bears are active, we might see further move on the upside towards 44,000, even 45,000 on the upside. So for me, even Bank Nifty remains bullish as long as it sustains above the level of 42,800, which should act as a line of defense for the bulls.
Okay, Kunal, I was just flagging off to our viewers about Zomato and why the stock could be buzzing today in trade because of that Alibaba block deal where they would have, they're likely to have sold $200 million worth of stock that they own in the company. Talk to us about Zomato's technicals. Has there been any improvement or is it still an avoid at these levels?
So, Karuna, if I talk about Zomato, there has been a very good base formation which is happening in the lower levels on the technicals. Now, even today, where we have some news-based action over there, I think overall this could be a very good buy opportunity in order to trade in the stock. The sharp correction after the listing, what the stock has seen, I think this could be a very good opportunity for investors as well as for traders to utilize this discount in today's trading session to add up onto the stock. I feel on the overall chart perspective, early indication of a very good bottom out signals are already made. My RSI is, which is the momentum indicator on a technical front, is already showing me a lot of strength. So indicators already indicate that the bottom is in the formation. Good opportunity to add it on the long side. The eventual momentum which will pick up on the upside will be above the level of 75. So once 75 will cross, we will see a swift momentum towards the levels of 100. So I am positionally very bullish on the stock from the current levels. Today's price action should be a very good opportunity to add on to your portfolios as well.
Okay, great. The second stock I wanted to highlight was Gland Pharma. They will be acquiring 100% stake in Cenexi Group at a value of up to 120 million euros. Talk to us about Gland Pharma. It's been witnessing a lot of momentum last 1 week, adding about 10% on the upside. Good time to enter?
Yes, Karuna, definitely. If I look at the chart perspective, the listing at which the stock was listed around 1700, 800, 1800 price. And from there onwards, it went to around the 4000 levels. And again, after that 4000 level, it has corrected exactly back to its IPO price. I think a very good opportunity on the chart perspective, what we are seeing. Yesterday's volumes were very large. That defines us that a bottom has been made again at the IPO pricing. So this is a strong base which has been formed at the current levels. I think a very good opportunity to add, even on a pharma perspective. If I talk about long-term charts, pharma looks very bullish. So I think Gland Pharma will again continue to go on the higher end. I'm expecting levels of 2200 on the upside in the near term, whereas on the lower end, the 1800, 1700 zone will act as a very good support on the downside.
Okay, all right. The third one also is a stock from the broader markets, which has added about 10% again in the last 1 week itself, Bharat Bijli. Now, there's been a block deal here as well. LIC has offloaded close to 2% stake in the company via open market transactions. LIC's shareholding has now come down to 4.5% versus 6.7% before. Talk to us about Bharat Bijli and the momentum that we started witnessing in the last 4-5 sessions. Can it continue?
Yes, Karun, if I talk about the chart on a technical perspective, on the date of 28th of October, that is on the October last series, we had seen a very strong breakout in the stock. And this breakout had come from an inverse head and shoulder pattern. Now, after that breakout, the stock has consolidated and it has tested its support zone, which was around the mark of 2135. From there onwards, the stock has seen a sharp bounce back from the support levels, and I think the momentum is likely to continue on the upside for the chart perspective. So, very good chart setup. Technical says that the bullish momentum is likely to continue in the stock towards the levels of 2600 to 2700 on the upside in the very near term. Or on the downside, 2200 will act as a very strong support for me. So it's definitely on the long side where we can still expect a 10 to 15% kind of a rally on the upside.
Okay, all right. Let's address some of our viewer comments and queries too. The first one I want to bring to your notice is Saurabh's comment, and he wants your advice on Jindal SAW. Good momentum, good uptick seen last 1 month, but still below 100 rupees a piece. Talk to us about Jindal SAW and the likely way forward.
So, Karun, if I talk about the entire metal space, so metal has been in a lot of news where you can see when the market is touching its all-time high levels, the entire metal packs is not performing. Whether if I talk about the leading names such as Tata Steel or a Jindal Steel or a GSW Steel. Whereas on the contrary, if I talk about Jindal SAW, it has seen some very good buying momentum in the last 10 to 15 days. A strong up move, what we have been seeing, a higher high, higher low formations on the technicals is clearly visible, and the stock is on the verge of a breakout. Now, generally, this 92-93 zone has been a typical resistance for the stock, but the kind of buying what we have seen in the last 10 to 15 days, the bulls are very active, and the resistance is likely to break on the upside. I'm expecting the stock to go towards the level of 101 on the upside. Lower end base, what I can see is that 89 is going to act as a very strong support for me. So from the current levels, I still expect a 10% move on the upside.
Okay, all right. That's interesting. Moving on to the next query from Sandeep. He's asking if Samvardhana Motherson is a stock to sort of add to your portfolio, and it has recovered, a fair bit from its recent 52-week low that it made of about 61 rupees odd. But still relatively a slow mover, despite what we've seen in the overall market. The buoyancy is something that it continues to lack. Do you expect any change in that pattern, or is it likely to be a little sluggish?
Currently, if I look on the chart perspective, it is likely to be a sluggish. I think the auto ancillary pack, which had done very good in the last 6 to 8 months as well, where you see Motherson Sumi is not doing exactly very well on the chart perspective as well. So I think the sluggish momentum is likely to continue. There are other packs on the auto ancillary which one should focus on, whether it's a Rico Auto or whether it's a Jamna Auto. I think stocks, FIAM Industries, these are the kind of stocks which should be in your portfolio, which will help you to generate the alpha in the market.
Okay, all right. The next query I want to bring up, this is from Trilok. He wants your advice on BHEL. Again, last 2 months, good 25-30 rupees added on this counter as well on the upside. Talk to us about the way forward.
See, we have already seen that the defense space of the PSU's pack has been doing quite well. And specifically, we have seen a very good buying momentum in BHEL. The actual breakout in the stock was about the level of 62-63. From there on, the stock has gone towards the levels of 80. Still, the structure still remains very bullish, but this is not an ideal time to add on to your long positions. Utilize dips into the stocks. 70 is a very strong support on the downside. So since we have seen a sharp rally, my risk to reward ratio is not favorable at the current levels. But if you get around the support zone of 70-72, that could be an ideal opportunity to initiate again long positions for again upside levels of at least 85 to 86 on the upside.
Okay, all right. How about Mahindra and Mahindra? Rakesh is writing to us and he would like your advice. In fact, Mahindra has been one of the star performers as far as heavyweights are concerned for this year. But the last 3 months, it has largely been a range-bound trade. So should one look at this with caution right now, or can you still buy it given that it has cooled off about 100 or more than 100 rupees from its 52-week high, so could provide a good entry point perhaps?
So yes, exactly, Karuna. What we had seen when the auto index rally had started, Mahindra and Mahindra was the top performer over there, where we had seen a stellar rally along with TVS Motors as well. Now, after that stellar rally, what we had seen from the levels of 900, where we had got a breakout, the stock went up till 1300 levels on the upside. Now, since the last 1 to 2 months, if I look at it on the chart perspective, it has just been consolidating in a sideways trend. So even the stock is not giving me a clear-cut direction on the technical fronts. We have the auto numbers which will be coming tomorrow. So based on that, the stocks will again react on that perspective. So it is trading near a support zone. So even if someone wants to initiate a long position, on the downside, 1205 should act as a stop loss for them. If it breaks that level on a closing basis, then we might see some further correction happening in the stock.
Okay. I'm getting a comment from Mithilesh. He wants to know about Mahindra Finance, and he's not given us his buying price, but he still would like to know if he should continue to stay invested in this counter. At least last 1 month, it has been very, very flattish. Tell us, what do you think could now be the way forward for a Mahindra Finance?
So for Mahindra Finance, it had been recently in a lot of news based on the incident which happened in Punjab as well, and from there onward, the stock had been corrected. Now, after the correction, but the stock has never seen a follow-up selling action. In fact, the stock is making a higher high, higher low formations on the technical charts as well. So the trend has been pretty strong on the chart perspective. For me, I will be waiting for a breakout above the level of 225. Currently, it is trading at 215. So I think a 10 rupees more move on the upside which will give me a confirmation that the breakout is there and the trend has actually completely changed. And we might see the upside towards the levels of 256 to 275 on the upside. So for me, it's still in my buy radar, but that breakout is left, which is there above the level of 225.
Okay. The next name I want to flag off is again from the large cap universe. It's Hindustan Unilever. Kalki Murthy is sending us a comment and asking us about the view here. HUL again, one of those evergreen stocks and favorites of long-term investors. In the near term, if we look at the last 1 month, it has seen a good, upside, but not as significant as many of the smaller players. So what do you think is likely to happen for this one going forward?
So currently, if I give firstly a broader perspective, the FMCG as a back was under pressure. If I talk about a year back, because of the inflation concern which were there. Now the inflation concerns are, we can say they have been passed on, and now we are even likely to see some interest rates decline going forward as well. So for me, the FMCG outlook is very bullish. On the technical front, FMCG has given me a breakout in yesterday's trading session from a sideways consolidation range. And HUL, we have seen a very strong buying volumes in yesterday's trading session where it has surpassed its previous 10 days high. So I think a strong up move is there in HUL, and this is likely to take the stock again to its all-time high levels as well. So it's definitely on the buy list. Currently, even one can add on to it. 2500 has now become a strong support on the downside. I'm expecting eventually the stock to cross its all-time high level, and above that even go towards the levels of 3000 on the upside. So HUL definitely remains on the buy list.
Okay, all right. The next query, this is from Rajiv. He wants your view on V-Guard Industries. Now, this is one stock we almost never have addressed on the show, I think. It'll be interesting to get in your perspective on V-Guard and how it's likely to play out.
So if I talk on the chart perspective, Karunya, V-Guard has been trading in a strong uptrend, but there has been no strong volume-based buying action. The stock in itself has been very volatile. Even on an intraday perspective, if I look at the candlesticks, they have been quite volatile. For me, the stock has already faced resistance around the zone of 268 on the upside. It is currently trading at 250 levels over here. So again, for the stock, the breakout confirmation is required, and which will come above the level of 268. If that happens, the stock can head quickly towards the levels of at least 300, 315 on the upside. So for me, I will wait for that breakout to come in, and then probably I would initiate a long position.
Okay, all right. And the last query quickly then, this is from Kamalaja, and she wants you to advise her on buying any of the footwear stocks that probably look interesting on the technicals, like Relaxo, Metro, Campus Activewear. She essentially is trying to ask if, which one is best of these names to accumulate right now.
So if I talk about the footwear industry, I think it is something which is likely to grow even going forward in the Indian markets. Footwear is something which you could act as a basic necessity as well, which each and every one of us wear. And if I talk about the brand perspective, I think Metro Brands looks very good on the chart perspective as well. A very good fundamental company as well as on the technical chart, it looks very good. The stock had recently seen a very sharp rally from the levels of 628 towards the levels of 969. So probably you can say almost a 50% move what we had seen. Now after this 50% move, the stock has been consolidating and it has corrected towards the levels of 800. I think a very good opportunity to again add on to the stock over here, where I can expect the stock to go towards the levels of 900 on the upside. The lower end base is formed at 782, which will act as a stop loss on the downside. On the higher end, I expect from the current levels at least an 8 to 10% move in the near term.
Okay. Kunal, before we let you go, want to also know what are the stocks that you would like to recommend to our viewers today?
Sure. So Karanya, as I said, we are ready for a pre-budget rally. The market is likely to look on the budget perspective. One sector which I'm very bullish on is the Nifty infra space. So generally we see on the budget perspective, infra has a lot of spending and where the government gives a lot of weightage to it. So for me, on a technical perspective, Nifty infra index has already given me a breakout on the chart. And this momentum is likely to continue till the next 2 to 3 months. And if I talk about the infra stock weightage, the highest weightage in the infra index goes to Reliance. So Reliance is one stock which I'm very bullish on the current perspective. 2 days before, the stock has given a very strong breakout from a falling trend line on the technical front. And this momentum is likely to continue towards the levels of 2,800, 2,900 on the upside. Currently, it is trading at 2,700. One can see a strong base formation, which has already happened around the 2,600 zone. So 2,600 could be a stop loss. On the upside, I'm expecting at least 100 to 200 points rally on the stock perspective in the near term. My second recommendation on the long side would be from the FMCG space, what we already discussed on the show as well. So FMCG on the chart perspective has given a fresh breakout. We are likely to see further legs on the upside for the FMCG space. So as a sector, I'm expecting a more 5 to 8% kind of a move on the entire FMCG pack. Out of that, my top pick from the current levels, apart from HUL, would be Kolpal. So Kolpal has given a very strong breakout on the intraday chart, even on the technical front. So Kolpal looks very bullish on the near term, where it can head towards the levels of 1680 to 1700 on the upside. Currently, it is trading at 1600 zone. So again, a 100-point kind of a rally in Kolpal can be seen in the near term. On the lower end, 1570 is a strong base which has been formed, which will act as a cushion for the bulls as well. So Kolpal and Reliance, these are the two stocks which are looking extremely bullish on the chart perspective for the near term.
Okay, great. So Kolpal and Reliance on Kunal's radar. Thank you for flagging that off for us. With that, it's a wrap on Morning Trade. Thank you so much for tuning in.